We're at the Transcorp Hilton Hotel right now, where capital market regulators, dignitaries from the government, and the private sector are coming together to commemorate 50 years of capital market regulation. Indeed, this is the beginning of a series of events to commemorate 50 years of capital market regulation in Nigeria. And the theme of the program today is Nigeria, the preferred investment destination. Joining me to share a few thoughts is the Chief Economist for Africa at Citi, David Cowan. David, thanks for joining us today. First of all, let me get your thoughts. I know you are on one of the panels today. What are the key messages you think we need to pass across to the government, the private sector, and even the regulators of the capital market?
From my perspective, I think the key message that I'm looking at and talking about as an economist is that we've been doing a lot of work on sort of long-term global growth and looking at which countries will grow fast, and have identified one of the African countries, Nigeria, to be amongst that. But what we're very interested in from the capital market side is that if you look at countries that have grown very rapidly for prolonged periods of time, they've invested very heavily. In fact, if you look, they've invested from 30 to 31, 32% of GDP. Now, if you look across Africa, if you take the latest IMF data, you'll see that across Africa, countries are investing 22% of GDP. In Nigeria, it's 24% of GDP. Now, the real challenge then is to get those investment rates up, and the Securities and Exchange Commission is a fundamental component in its development of the capital markets to get investment up to drive high growth rates in Africa.
Right. While you're here, let me just get your thoughts on the population figures that came out last week. 168 million people in Nigeria. We know that this week the world's population is expected to cross that 7 billion mark. What are your thoughts on that point, the fact that Nigeria is growing at 3.2%, and when you juxtapose that against the reform agenda of the government and of course the regulators to move the economy forward, is this a good or bad thing as we speak?
I mean, I guess you want to step back actually a little bit, right? And look just at the Nigerian number, right? Which is a projection because you haven't had a new census, right? But let's think about this in broader terms. In this bigger global growth study we've been looking at, what you really tend to see is a change in the world economy. And what you see is that poor countries with large populations tend to grow quite quickly, and they will increasingly adopt a huger part of the global economy that we're going to move into by 2020. Now, what's interesting in the African case about this is that there's huge varieties if you look around. I was in East Africa last week, so if we go up to somewhere like Rwanda or Uganda, these are quite densely populated countries. If you take Uganda, for example, it's to move from 30 million people under UN population projections to 100 million people. Now, it's a small country, that's going to put huge strains on it. So if I think about population, there's two things that need to be thought about. First, agriculture needs to grow much faster. In fact, Africa needs an agricultural revolution not only to feed its own populations, but to feed the world's population, arguably. Second, it will pose huge strains as economies change. People might have to move around across countries, but it's going to move people from rural areas into urban areas. That's the only way that a country like Uganda, for example, is going to live with such a large population. So Africa will urbanize, and that will pose huge challenges. So I'm not negative about it. It is a market opportunity and will create much bigger markets for investors, but it will impose strains over the time that it happens, and that's the problem that has to be managed by governments.
All right, you just touched on agriculture, and we know that for the government right now, that's a key focus in its broader transformation agenda. But let me just get your thoughts. What impresses you the most about the transformation agenda that the government has set out? We know they're doing a lot of things in regards to infrastructure, power, agriculture, trade. What excites you the most in this reform agenda?
In Nigeria's case, I think it's power, right? If the government gets power correct in Nigeria, then its potential to grow is very great. I mean, we put some quite conservative assumptions in our long-term global forecast of Nigeria growing at 7%. But in all the trips I do through Nigeria, I talk to industrialists, they'll tell you if Nigeria gets the power question right, there's no reason why it won't grow at 10, 12% a year, right? And that's the key one. It brings down costs. Nigerian companies are probably paying 30% more than they have to by having to run diesel generators and import diesel and the whole costs and management burden that goes with that. So electricity, I think, is the key one, and that's what we'll be watching.
Let's flip that around. What depresses you the most? A lot of people talk about the pace of reforms.
Yes, the pace of reform is still an issue. We've still been waiting. The government's taken a long time to get on their feet. But I would actually go back to the one. I think agricultural sector reform is one of the harder ones to do in Africa, right? Power reform, infrastructure, there's big projects. Governments like being associated with that. Agricultural sector reform, increasing smallholder productivity is not something that captures many big headlines out there. And in fact, if you were to worry about Africa, you would say that agriculture, if you look across, even in Nigeria, for example, has only really been growing at 4.5%, 5% a year in recent years, compared to very strong growth in the construction sector or the retail sector, up at 15%, 20%. And so the key is to get agriculture going, get fertilizer provisions, seed provisions out to rural areas. It's not sexy reform, but it's very necessary reform.